Hi everyone, Caitlin Moore here, the Financial Literacy Manager at UBT. Today we are back in our red flag series and we are talking about negative banking reporting history, and I've added on building credit because a lot of it goes hand in hand. So today we're going to be talking about if you have negative banking history, how to deal with it, how to even find out if you do, and then how to build up your credit from there. So let's get started. So let's talk about what do you do when you've had negative banking history, but you still need a banking account. So what we're talking about here is the accounts that maybe you've overdrawn, had fees that went unpaid, and eventually the bank has closed your account. At UBT, it takes about 30 to 60 days for an account to close if there's no communication. If you do have some fees or you're overdrawn, it's best to communicate with the bank right away because they can dissolve some of those fees possibly, or help you get back on track and open your account back up. But if you're in the situation right now that you had your account closed and you have not taken care of it, this is what we're going to be talking about. This is going to show you what to do. So some of the things that get you to that point of having an account closed and then you're put on what's called the check system list. It's a bank system list that any bank can access to see if you've had closed accounts or if you have negative banking history. So if your name is on there, that's likely why you cannot get a bank account anywhere. And the reasons folks find themselves on there is outstanding debt from a former bank. So you don't have to be a UBT customer to go to UBT to find out if you are on that list and what to do about it. Bounce checks, unpaid bank fees. Now, these are all things that go unaddressed. So just because you bounce a check or you don't pay or you get a bank fee doesn't mean that you're going to have a closed account and be put on this list. It just simply means you need to pay the fee or deal with the bounce check. Or fraud. If there's fraud on your account, oftentimes if the bank notices and it's significant fraud, they'll close your account or freeze your account for security purposes. So it's actually in your favor that that happens. But if it is fraud on your account by your doing and you don't communicate with the bank or take care of it, then you might find yourself on this list. Bad credit, payment delinquency. So if you just continually don't pay your payments, errors made by a reporting agency. Sometimes people are on this list accidentally. So if you find yourself in a situation that a bank turns you down for an account, you might want to ask about the check system list. Abuse on the account, such as daily limit overages. So these affect your eligibility for an account and also affect whether you're on that list or not. So a lot of people will call it the blacklist of banking. It's not. It's simply a reporting agency that the banks are obligated to report to. For smaller account balances, they may not. So there are reasons why you may or may not be on there. But if you are on there, this is your presentation. So what do you do? What do you do if you, number one, know that you're on this list, or maybe you're just having trouble getting a bank account and you don't know why? Request your credit report. You should be doing this once a year anyway. Credit report's a hard pull, so an actual pull of your credit report, everything that's on it, everything that's been reported, you can get that for free once a year. You can go to annualcreditreport.com, or you can go to the bigger credit bureaus, Experian. I have them listed later, and you can request that pull. You should be doing that anyway, just as a yearly annual checkup on your credit. You want to make sure that everything on there is yours, and if there's not, there's ways to report that maybe there's fraud on your reporting, things like that. Another conversation. If you do have questions about that, reach out to me. But pull your credit and just find out. You will see that there are things in collections or with your bad banking history or your negative banking history, it might be on that report. So that's one way to find out. But you can also go to a bank. So you can pull up through the UBT drive-through and let them know that you might have your name on the check system list. They can actually pull that for you. It will say that you owe this much money to this bank and you can go and pay it off. So that's the key here. You can always get in good standing with banks if you find out that you're on this list by paying your fees. So correcting your fees is going to be the biggest thing that you can do for yourself. A lot of times banks will go on a payment plan. They'll take anything that you could pay right now, pay more later. So it might take a little while to pay it off depending on how much is on that you owe, but it's not out of the realm of possibilities to get your name off of this list. Once you pay off your fees or your negative account balance with whatever bank that you had the former account with, they're actually going to report back to check systems that you've paid it off, that everything's paid in full and clear. Takes about a month to get your name off of that list just because of the way that they report. But if you're interested in paying this off and getting a bank account almost immediately, you can actually just get a verified letter from the bank that you had that account with that it's been corrected. And a lot of banks will honor the verified letters from the other banks. So if you owed at a different bank and then came over to UBT with a verified letter, they might just open you an account today. So there's always good news on the other side of this. This is the biggest thing that I want people to understand, because I don't believe that the general public understands this point, is that just because you have negative banking history doesn't mean it can't be redeemed and you move forward. So paying off those fees as fast as possible, communicating with that bank that you had the former account with, is going to be key. And then once it's all cleared, it may take a month or two or however long it takes for you to pay off your balance, but you can get right back on track with a bank account, savings and checking, and go from there. So all hope is not lost if you have a former account. I know someone that has some bank fees and they're on the check system list, and they've been there for about 10 years because they just don't want to pay it off. So they just can't get a banking account. And they're okay with that right now, but I keep encouraging them to just pay off the debt, and they don't have to open up an account, but at least it's an option for them so they can get a loan, checking account, things like that. But they're not interested, but it's completely up to you how long you want to take to pay it off. But communicate with the bank that the account was with. That's going to be key. So no credit. Let's talk about getting a bank account. So we have established that if you have that negative bank account with a bank, that you can't open up one anywhere else because you're on this centralized list. But a lot of times people who don't have credit don't believe they can get an account. You can still get a bank account if you don't have credit. So even minors, some banks will put a stipulation that they have to have a parent or a guardian sign off and be on the account with them, and that's okay. Regular accounts don't need credit checks for the most part. If you're just putting a couple dollars into savings and doing your auto pay with your checking account, there's free accounts out there. There's low cost accounts that don't need credit. So you can still get a bank account whether you have credit or not. The time where credit's going to affect you is if you're trying to get a loan or a credit card. So something that takes a credit check. So if you don't have credit or you have bad credit, that's what we're going to talk about here. How do you establish credit? We'll start there. The best way to establish credit is with a secured credit card. I cannot advise you what to do whatsoever. I just want to put that disclaimer out there, but this is a really great way to build credit, especially with young people. What a secured credit card is you're basically putting down a deposit or the collateral for however much you want your credit card to have a spending limit for. So for example, if you want a $500 spending limit on your credit card, you go into the bank with $500. You basically put it down just like you would a security deposit with an apartment. So you say, I want a $500 secured credit card. Here's $500 cash. And what the bank does is they just take your $500 as your security deposit. They'll give you a secured credit card for $500. And then the credit card acts as if it would any other credit card. You go and spend money on it, you're going to get a bill. And then you need to pay off that bill. You spend money, you get a bill, you pay on it. The initial $500 that you kind of put down for this credit card is really for if you neglect to pay your bills or you close the account and there's still a balance. This takes the liability off of the bank to give you this credit card. So if you are paying your bills, you have your $500 credit card, you pay it off, you spend $300, you pay off $300, and then you say, you know what, I've established my credit at this point. I'm going to close this account. There's a zero balance. You don't owe anything. You go to the bank, you say, I want to close this secured credit card. They're going to give you your $500 back. So it's just like a security deposit with an apartment. If everything's clean and good in your apartment when you leave, they're going to give you your security deposit back. And that's the hope for the secured credit card. The way that these secured credit cards help you build your credit is that they are just like any other credit card. So they are reported to the credit bureau. So as long as you're paying your bills on time, keeping your balance low, and we'll learn a little bit about that in a minute, but keeping your balance at a good point and continuing to pay your payments on time, you're building your credit at the point, because every month that's reported to the credit bureaus, and they put that on your report. So it's a great way to build credit without anybody having the liability. You just have to foot the bill at the beginning. If you want $1,000 secure spending limit on your card, come to the table with $1,000. If you want $100, whatever that looks like for you, whatever you're able to afford, that's where you come to the table with that cash, and you'll get it back as long as when you close your card that you've paid off the balance, the spending balance. Cosigners, another way to build credit is cosigners. If you're co-signing for anybody, you need established credit. So if you are getting a loan and you need a cosigner because you don't have good enough credit or established credit, the only person that could sign for you is someone with established credit. So this just kind of bumps up your overall credit rating to be approved for that loan. The only cautionary piece with cosigners that you're getting or you're signing for someone is that you are 100% liable for whatever loan or credit card you're co-signing on. So if you are co-signing with somebody and they refuse to pay your bills, the bill on, say, the loan, you are liable as a co-signer to do so. So you want to choose your co-signers wisely because they need good credit, but you also need to be cautionary when co-signing for others. You need to be able to trust them that they're going to pay their bills, because you don't want to end up with the bill in the end. So it's never a good idea to just co-sign for anyone or just your friends because you have good credit. You need to understand who they are, their money situation, and if they can even afford the loan or the credit card in the first place. But co-signers also have their credit affected by whatever's happening with that loan or credit card. So it increases your chances for approval of the loan or the credit card, but it also is reported to the credit agency in your name. So even as a cosigner, you're still building your credit with this loan or credit card. All right, other ways to establish credit. High interest loans. So small car dealerships often will give a loan to anyone, even if they have low credit scores. But the trade-off is that your interest rate is really high. So it's not always a good idea because you're going to be paying your principal amount, so how much you owe on the loan plus interest. But if you have bad credit, that is one way that folks get cars, for example. And it's reported to their credit bureau. So if they're making their payments on time and doing that correctly, then it's looked at as very positive. But the alternative is you're paying higher interest rates. If you get on your phone bill, if you get your own phone bill or your name on the phone bill, that's reported to the credit agencies too. So that could build your credit as long as you are doing that on time and making correct payments. I would highly advise automated payments if you struggle with getting things in on time, because that will affect your credit. So credit bureaus look at if the amount owed is being paid and if it's paid on time. So you want to make sure that automatic payments are being made if you struggle. And a lot of times phone companies will give you a discount if you do automated payments. Household bills in your name will also affect your credit, so that could be a good thing. So talking electricity, gas. Being an authorized user on someone else's credit card. So if we look at spouses, one spouse may have higher credit than the other one. So they're the ones that take out the credit card, but they authorize the other spouse to be on their credit card. And that will also affect, it's not a co-sign situation. It's just that they're an authorized user, but their name is still on the credit card. So it does affect their credit. Store credit cards. So if we think of the big box stores, they all have credit cards that you can only use at their store. Even just regular retailers often have credit cards specifically for their store, so you can't use it anywhere else. That's a good way to build some credit also, because you can't just go out and spend anywhere you want. You have to go to that specific store. So a lot of people, especially with no credit, will go to the big box stores. I'm not going to name names, but they're the ones that we get groceries at. You can get clothes and necessities and camping gear, anything within this one store. And so some people will get the store credit card for that store because they're going to shop there anyway. So they go, they shop for their groceries, they swipe their credit card, and then immediately turn around and pay off that credit card in cash because they were going to spend it anyway. So it's a great way to build your credit without having to go into debt. Secured loans or secured credit cards, we've talked about those, and then getting your bills on your credit report. So this is a little rare. So there are some bills out there, that some regular bills that you would have that they don't report to credit agencies that you can request that they do. It's rare and it takes a lot of advocacy on your part to get that done. But maybe your electricity company does not report to the credit bureaus. You can request that they do. All right, how can you increase your credit score? We've kind of gone through some of those, but one of the biggest ways to even know if you need to increase your credit score is to keep track of your credit. So these are the three main credit bureaus: Equifax, Experian, and TransUnion. Those are the agencies that all of your credit is reported to. You can go to any of the three and request your credit report once a year, a hard pull, and I would strongly suggest you do so. A lot of people do this at the end of the year. They just make certain things an annual event, and so they check it around the beginning of the year. They go and do a poll. You want to make sure that what is reported on there is yours. So if there's a credit card on there that's not yours, you can report that and they can get that off of there. My husband, for instance, noticed there was a lot of expenditures on his credit report, including a home loan. It was not his. What had happened is his Social Security number was one number off from somebody with a similar name. And so it had just been put on his credit report by accident. So he reported it to the credit bureau and they got it off very quickly. They found the mistake and they took all of those loans and credit cards that were not in his name off of his credit report. It was a little stressful for about a week, but it wasn't fraud. It was just an accident done by the credit agencies. So it was easy to take that off. So you want to just make sure that what's on there is yours, because if it's dragging your credit down into a negative number or a negative area, you want to make sure that that's your doing. Maybe this is going to show you if you're making payments late or you're not doing enough, like the minimum payment required, things like that. So your credit score and your credit report will tell you a lot of information about what you can change in your spending habits to increase your credit. There's apps like Credit Karma. I really like that one. You can access your credit report at any time, but it's considered a soft pull, so it's not going to show everything. So it doesn't show collections. A lot of times people have a collection debt on their credit report and they don't realize it's there because it's so small. And a lot of times we just forget. We go to the doctor, we get a bill, we put it aside and we forget about it, and they're not going to actively pursue you for $100, but instead it goes into collections and it's on your credit report. So if you have anything on your credit report that has to do with collections, get that paid off ASAP. It's really important to do that. Collections will really bring down your credit score, but once you get it paid off, it will bump it back up pretty quickly within a couple months. So get that paid off as fast as possible if you have any collections debt. But pull your credit score, see what's on there, make sure it's all yours. There's a way to report fraud or any discrepancies easily within any of these reporting agencies. Right there on their website, it's real easy, or you can give them a call. One of the ways that credit agencies or credit bureaus have suggested, now this is not a UBT suggestion or advice, it's just some of the ways that the credit bureaus have suggested to increase your credit score, is to do some of the following. So pay off debt and collections ASAP. It's very important to get debt off of your credit report. It's very typical in the American lifestyle to have debt: a house, a car, credit cards. One of the things that credit bureaus call credit card debt is revolving debt. And this can be actually a really positive thing for your credit score. Maxed out credit, I'm going to explain it. Maxed out credit cards should be paid down to about 30 to 50% of the balance. So if you have maxed out your credit card, get at least half of it paid off as soon as you can. Don't spend any more on it, just pay it off. Once you get it down to about 30 to 50%, credit bureaus would suggest spend a little, then pay it off. Spend a little, pay it off. Don't max it out, but spend a little and then pay that off immediately. That's what they call revolving credit. The biggest thing with credit bureaus is they want to know that you have debt. They love to see you in debt, which is not always a good thing, but they love to see you have debt, but they want to know that you can manage your debt. So if you have so much debt that you can't pay on it, that's not good and your score goes lower. But if you have debt or you have credit that you're using, but you're paying it off so you're able to afford your lifestyle, they love seeing that. And so they're going to bump up your score. So for example, if you have $1,000 credit limit on your credit card and you've maxed it out, that means you owe the credit card company $1,000. The credit bureau would suggest pay it down to about $300. Get it down there. And then start spending on it, but pay it off. So maybe you spend $200 in bills that month on your card. So now your balance is $500. Pay off that $200 and then spend a little more and then pay it off. So your new balance is usually around $300 just consistently. They would say that that's revolving credit, and it's a very positive thing because you have credit, you have you have some wiggle room to spend, but you're managing it at the same time because you're paying off what you're spending. So that's what credit bureaus would like to see. Again, this is not UBT suggesting or advising you to do anything. This is simply the suggestions from credit bureaus in order to raise your credit score. Now, if you have that $1,000 credit card and it's maxed out and you can't pay it down, one of the suggestions from credit bureaus is to call the credit lender and ask them to actually increase your spending limit. So you go from $1,000 to maybe $1,500 or $2,000. Now your balance is 50% of the card. And so that's when they would say, now jump in there, spend a little, pay it off, spend a little, pay it off. This is putting you at risk of more debt. So if you are not good at managing your credit card or paying down balances, maybe this would not be a good idea for you. But if you're looking to just increase your credit score for right now and you can afford to spend a little, pay it off, spend a little, pay it off, this might be an alternative for you. One of the ways to increase your credit score is just to be patient. People get very anxious because they want to buy the house, they want to get the new car, they want to get the loan, but their credit score is low. And so they do everything that they possibly can within a month to raise it. It's not going to be that quick. Increasing your score takes time. You can only do what you can. So if you have collections, pay it off. If you've got debt, pay it off. And it might actually make your credit score dip a little bit and go a little bit more lower because credit bureaus like to see you in debt. They want to see that you can manage your debt. But once you get things paid off or even close a credit card you're not using, your credit score will rebound. So it may take an average of 3 to 6 months to actually see your credit score go up a significant level. There's certain things that make your credit score go higher faster than others. So closing a credit card is going to make your credit score dip. It's going to make it go lower. But if you don't have a lot of debt at that point, it's going to raise it eventually. So give that a couple months to do so. One of the important things, if you just want to keep your credit situation healthy, you don't want to take out any more credit cards, you don't want to take on any more debt. Those are two major things, but make your payments on time. That's huge. To have it on your credit score or your credit report that you make late payments or you skip payments, that's a huge negative, and that's what lenders do not want to see, especially when it comes to mortgages or loans. So you want to, at minimum, be making your payments on time every month, and don't sign up for any more credit cards. This is something that people do a lot when trying to get a mortgage. They go out and try to get a bunch of credit opened in their name, even though they're not using it. So they have multiple credit cards, and that's not in your favor. What you should be doing is just sitting still, using what you have, and don't take out any more credit cards. It's okay to close them, but give yourself some 3 to 6 months for that buffer for your credit score to kind of dip and then come back up. So you don't want to do anything drastic if you're trying to get a mortgage or a big loan for a car. especially the mortgage piece, because they're going to look at several months, maybe a year or two of your credit history. So main things to walk away with when building your credit: make your payments on time every month. Don't sign up for any more credit cards just because you can. Don't do that. And then pay off debt as soon as you can. All right. So that is the end of our third presentation in our red flag series. We'll have another one next week. But if you do have questions about anything related to today's topic, please give me a call or an email. I'd be happy to get you connected with somebody from our credit department, or if you have some questions about whether you have some negative banking history, maybe you just don't know, but you kind of have an inkling that you might, I can absolutely get you connected with somebody at a branch nearby. You don't have to be a UBT customer for us to help you out with that, but we would love to help you, especially if we can, if you can get that paid off and then come on back and we'll open you up an account. We would love to do that for you, but I'm happy to walk through any of the questions that you have. And I love hearing stories. So if you have a story that connects with any of the topics that we've been going over, shoot me an email. I love to hear them. I love to use them in my presentations, especially if it's a success story. So if you're okay with me sharing, I'll never use your name, but I love sharing connection pieces to make these topics more real and relatable to everyone. So I'd love to hear from you. Here's my information, and we will see you next week. Thanks so much.